Good morning, everybody, and welcome to this presentation with Magle Chemoswed in relation to the company's quarterly report for the third quarter of 2021. I'm joined here today by CEO Justin Pearce and CFO Petra Sjölin. They will soon give you a short presentation about the company and what's happened in the third quarter. After their initial presentation, we will have a Q&A, and you are very welcome to write your questions to us. There is a control named questions either on the right side of your screen or on the bottom of your screen, depending on what unit you're using. You can write your questions there. We will read them out and the company will answer. As for myself, my name is Alf Riple and I will be your moderator for today. The only thing that remains for me to say is that this session is being recorded and that the recording later on is to be found on Magle Chemoswed's homepage and on Västra Hamnen's channel on YouTube. So with that, I'll leave the floor to you, Justin and Petra.
Super, thanks Alf, and thanks again for facilitating and hosting us. Yes, Q3 for Magle Chemoswed as a consolidated company has been a good quarter for us. It's been a quarter that we've met expectations, and certainly the company has performed very much in the way that we expected it to do. So we're quite satisfied with the quarter, and we think it's a good quarter given the current circumstances of the global markets. Without going into too much drama about COVID, the COVID situation of course continues to be influencing some parts of our business. Certainly in some of our more strategic markets, such as the Middle East and the Far East, we see that there is still some negative effect from COVID, and we're monitoring the situation carefully now moving forward, since that we've acquired Pharmacept, and access to hospitals and clinics around Europe, of course, become far more of a focus for us. The quarter itself is a tribute to our focus on profitability, which is what we've been trying to do this year. So essentially to get more money out of the money that we're making, and the balance between what investments we make and what reinvestment we make into research and development against that profitability. I think our model is currently working quite well, as the figures say. The Pharmacept integration is now well underway. We had a small delay in terms of access to Germany and staff. We've increased the sales force. We've employed 2 new people directly into that. So our strategic goal to really focus on the DSM products now and to integrate Pharmacept in a good way and grow the sales organization is well underway for us now. In terms of where we performed, looking at it from a headline level, on the figures, if Petra would change the slide. Yeah. EBITDA was 4.9 for the quarter and 3.8 compared to the year before. Like I say, we've had a lot of focus on profitability during this year, and we can see the operating profit for the quarter as being 1.9 million as opposed to 1.1 the previous period. Net sales for the period we increased. This is largely due to increased revenues coming in from development services, and also our solid state chemistry team have been performing very well. So this has given us a small bump in revenue. Profit after tax at 1.5 million, which is a vast improvement on the same period last year, which was a negative figure. So we're quite happy to being able to turn that around year on year. And looking at the overall net sales for year to date, we are of course a little bit behind in terms of the same period last year. So we're at 96 million for the year to date, whereas last year we were at 101 million. However, if you're looking down a little bit in terms of performance, the net profit on the 96 million is coming in at just over 3 million, and the same period for the year to date last year was at 2.5 million. So we have a reduced turnover, but we have an increased profitability overall in the business. So we're quite satisfied that the quarter as well as the year to date is performing well in accordance with expectation. In terms of performance across the individual business areas, would you mind, Petra? I think, yeah, So we have the high demand on the CDMO services, as we've said, and we're choosing those projects very carefully at the moment to make sure that we have capacity and capability to service them, but also that they're the right fit for us moving forward. We've increased our development pipeline and the investment in the development pipeline over the period. So we've invested over 1 million directly in expense into developing the technology, whereas the same period last year was around 500,000. So we've managed to increase investment into the pipeline. When it comes to Smart Gel, registrations have been increased. We've included the key Latin American countries. Now we've expanded out from Uruguay and Paraguay. And we are in the final stages of supporting AXO in the registration in Kuwait at the moment. So we expect that to come through relatively soon. When it comes to Smart Pan, the post-market clinical studies that we're planning, the protocols and everything are now in the final stages. So we're just putting the final crosses on the T's and the final dots on the I's, and then we hope to be able to move that study into practice in 22. On the really positive side for us, the first production of the AXO wound gel, which of course is the brand that we sell Smart Gel under through a distributor in the Middle East and the BRIC territories. This production has been completed and we've delivered the first samples. These are being used as pre-marketing samples and registration samples. So we've transferred the technology now into manufacturing. The processes are set up and we're upscaling and preparing for manufacturing for AXO for 2022. In terms of manufacturing, the third quarter, the manufacturing remained constant to forecast, which we're really happy with. So we didn't have any major jumps due to COVID demand that we've seen in the earlier quarters. And the combined manufacturing revenues, although slightly down on last year, from 19 million down to 15 million, we've again focused very much on the profitability on that, so that we see that the money that we're generating through manufacturing is being converted into profit. So although there's a slight decrease in this is mainly due to a lack of demand for some of our generic product in China currently. But overall, we're happy with where the performance has been for the quarter. Could you go down the slide, Petra? Thanks. Contract services, as I've already said, good demand in this area. We see good sales growth in terms of solid state chemistry, that we've expanded that team by almost 100% over the last year and a half. So that's starting to pay dividends for us. Other than that, development service revenues were at 8 million. You can see there's a vast difference between the two areas here. But overall, we're at about 80 to 90% capacity. We've tried to free up some capacity on our development side so that we can support our pipeline as well. So we're trying to make sure that the contract services are still delivering. We can still get good growth and profitability out of there, and at the same time still support the pipeline. So I think that sector of the business has performed above expectations for the period. Could you go? Thanks. In terms of pipeline, there's nothing major to report. The two main products that we're working on at the top of the embolization products, the Embocept M and the Embocept L families. These are in the final stages, and this is now just preparing the final scale-ups and regulatory documents before we can make registrations. Petra. So overall, the quarter was very strong for us. We've managed to reach all the strategic targets we had, all our budget targets that we've had, and I think our focus on profitability is beginning to pay dividends for us, looking at the quarter and the year to date. So to deal more with the numbers, I'll pass the presentation over to Petra.
Thank you, Justin. So the financial performance and the Q3 report that we have just released, this of course includes Pharmacept from June to September. So this includes all their numbers as well. So looking at the Q3, as we Justin previously talked about, For the period that we have successfully moved forward for that period, both in the net sales, but also in other revenues for this part. Some of these parts are built through costs that we have taken for our customers that will end up in the part for other external expenses. For the period, we also have some increases in terms of other external expenses, which I just mentioned. Some of it is built through costs that we have taken for our customers to make sure that their production and their services has been moving forward in the pace that we have expected, and also the pace that the customer is expecting from us. From that part, we are also making sure that we are on time in terms of reporting for our customers, making sure that we are in line for the other expectations that might come with costs. For the material, looking at the consumables in terms of raw materials, we are in line with our expectations, and what we have done for the full year is also negotiating prices with our suppliers, making sure that we have good, valid, and accountable agreements, making sure that we are in line with controlling our costs in terms of purchasing, but also inventory valuation. Moving forward for the personnel costs, this is something that we can see that is a bit lower than previous period, but we have according to expectations. The EBITDA is 15%, which is stronger due to stronger costs, and as I said, negotiation with suppliers, but also bringing a good product mix in the full part. Some increases than expectations in terms of depreciation, but this is due to activation on capex that we have within the business. Looking at the sales mix, as I mentioned, as you can see that the top graph is the red one, which is for the current year quarter, and the gray one below is for previous year's quarter. As you can see, the previous year was quite just a few blocks of it. Now we have decentralized the revenue by mixing the portfolio a lot more, and it shows a decrease of the risk behind it. We have also seen an increased demand on contract development and manufacturing services from our customer. Compared to previous years, same quarter, we have a growth of 35%. Some of our own manufacturing, as Jönsson said before, has a bit slowed down due to COVID, and there has been less demand for that case. And the royalty, as we have as well, has been also had an impact on the COVID situation. What you can see also, which has been added, the DSM technology has now been launched through PharmaCept, and you can see a growth on that technology as well. The bottom template, you can see the sales mix, and just to be the distribution from the total net sales. And cash and liquidity, looking at our cash from operations, which is the red bars in the graph, showing and during the quarter that we have not a big change for that. Incoming and outgoing costs are remaining the same. What we have is, as you can see, the revenue increase. For the quarter as well, we have a decrease of need of overdraft compared to the average. But also we have the liquidity on the bank remains stable, and we are looking for the next quarter. Thank you. Back to Alf.
Thank you very much, Petra and Justin, for the initial presentation. We'll proceed now to the Q&A, and I remind everybody in the audience that you are free to ask questions. There is a control that's named the questions, either on the right side of your screen or the bottom of your screen. You can enlarge that and write your questions there, and I will put them forward to the company. While you're all thinking about clever questions, I have a few of my own. If we can start with your income stream from royalties. The amount that you have earned through royalties this quarter was a bit lower than it has been in previous quarters, and you point to the COVID situation in the US and the reduced consumption of Arista, I suppose. I would have expected that since COVID restrictions are being loosened, that this activity would accelerate. Do you have that expectation going forward that they will normalize, and do you see it going back to the annual rate of roughly 30 million Swedish as it was before? Is that a reasonable assumption on my part?
Yeah, absolutely. I think that there are two things here, Alf. One is the revenue adjustment between the two, because we are paid out in USD. So between the two periods is, of course, a revenue adjustment for us there as well. And the overall effect of COVID as it wears off, we do expect the product to come back to the levels that it was pre-COVID. So absolutely, we do expect it to come back. Currently, the US is just trying to get back to some sort of state of normality. And as that state of normality comes back, as long as we don't have a big COVID impact over the winter period now, we do expect by the second half of next year for things to have normalized again for us.
What sort of visibility do you have in terms of these numbers? I mean, can you see more than a quarter forward what you expect the royalty revenue to be?
Yeah, of course, we have ongoing discussions with the licensee to keep us informed of where they see the demand going and what their expectations are, and we then have a quarterly update with them as well. So we have some visibility. We don't have a lot of control or influence into it, but we certainly have an expectation of what's coming in.
All right, thanks. Moving on to gross margins. Petra, you mentioned that the gross margin was higher now than it was in the corresponding period last year, and you have mentioned previously efficiency improvements and supplier renegotiations, and also beneficial impact from exchange rates. Is that the full explanation of why margins have been so much higher, and do you see this as a temporary thing, or do you think we are going to go back to more the level of around 80 that we saw through last year?
I think in terms of the expectations moving forward, since we have a lot of these contracts set with the suppliers, and moving forward, we still do negotiations, of course, but also what we can see now in terms of the market moving forward is the raw material is easing up. It's easier to still, it hasn't been a demand previously to get raw material in time and delivered, and also to get access to it. Moving forward now with COVID is now slowly disappearing, let's put it like this, or slowly doesn't have that major of an impact of the company. So in the end, I'm hopefully and looking at it moving forward as well, that we will continue to have the control over the prices, but also to making sure that we have the control over the purchases and value of this inventory.
I noticed also in your Q3 report you referred to electricity prices in your cost base, and is electricity a big cost component at Magle?
We do use a lot of electricity, yes, but we are also ensured that we are in close contact with our suppliers with that to hedge prices.
All right. Do you have long-term price contracts, or are you buying in current prices?
We have long-term contracts with them.
Okay, good. Also, I mean, your plans are to go into Latin America in particular and the Middle East, and your sales there will be through distributors. Is it reasonable to assume that the gross margins that you will get through these distribution contracts will not be the same as your gross margin that you when you sell through your own distribution organization?
No.
Okay.
The reimbursements in those territories are fairly high for ourselves, and one of the advantages of bringing Pharmacept into the fold gives us a far better gross profit in relation to the DSM products that we've been previously supplying to them just as a contract manufacturer. So the overall sales mix on the more DSM products that we can get out there will actually have a positive impact on the gross profit for us as a whole. So yes, getting into those territories does cost us a little bit of money that we lose in relation to having a distributor, but the gain in having the direct contact into the market rather than just supplying on a contract manufacturing basis will still end up giving us a higher gross profit than we've previously seen.
Okay. Now, my worry was that they're using third-party distributors in some of those external markets would water down the total. But what you're saying is that you don't expect that.
No.
All right. Since you mentioned reimbursements, you note also that you have a reimbursement filings on the way for Reimbursement S. But what's the status in terms of reimbursements for SmartPAN and SmartGel?
SmartGel is almost done in Europe. It's a slightly easier one for us to do because the categories are already established, especially in Europe within the health authorities. When it comes to SmartPAN, because it's a first-in-class product, there's no nice niche for us to fit into. So we've had a number of panel discussions with different payers from different countries, different regulatory authorities as well to guide us in relation to this. That work is almost complete. We expect to be able to go at least into the German market towards the middle of February and make a requirement or a request rather to the German authorities to establish a reimbursement code for the product. And at the same time, we will start the post-market clinical follow-up study at Heidelberg University as a strategy to target the German market so that we can use that clinical evidence as further support for a better reimbursement code. So we're close.
Yeah, that was my second question about the SmartPAN and the post-market clinical study. Is the main motivation for that study to have a better information background in your reimbursement filings?
Yeah, it helps us from a sort of health economics perspective, without a doubt. It gives us real life data in terms of what the patient benefit and patient outcome is, and we can extrapolate that back to what that means to the healthcare providers. So yes, it supports significantly there. There are two other rationales for running that study. One is to generate further scientific evidence. As a first-in-class product, it's a tough road to go down to convince physicians that the product is a good product. And the second is to generate some scientific literature that we can put behind the product as we move into registrations in different territories.
And just a quick question about Germany. Reimbursement filings there. Is there one national body that you can talk to there, or are you down to the different states within Germany when it comes to reimbursement codes?
We're having an approach across all of them. So the hospitals and the hospital administrators, we have discussions with them so that we can have support for that, and then we have discussions at a more central level as well.
Okay.
So we're coming to it from all angles.
Okay, good. Back to the cost base of your company. You report that you are, as of the last day of the third quarter, you were 68 employees in Magle Chemoswed, and then you have 5 people in Pharmacept. I noticed you said you have applied or employed a couple more just in Pharmacept. So, yeah. If my addition works out, how you should be around 75 people now. Is that roughly correct?
Yeah.
But are you also still in the process of employing more people? You say that you're going to ramp up the sales function in Pharmacept. So how do you see this going forward? If you're looking 6 to 12 months ahead.
a non-forward-looking statement, just in terms of where we would like to be. Where we would hope to be, we would hope to have between 12 and 15 people in the sales organization within Pharmacept, and to have really expanded the reach into some of the other European territories where we have a much lower reach currently. Looking at some very key territories such as France, the Baltics, moving into the Netherlands and those areas. So this is our plan for sales staff increase in relation to Europe, without a doubt. And at the same time, whenever we look at recruitment, for us, it's not about headcount, it's about having the right people who can fit into the organization and cross-function into the different things that we're doing in the business. So we've actually reduced the headcount quite considerably by about 9-10 people over the last 14 months. This is because of some retirements, some people moving on, and some restructuring in the business as well. So when it comes to recruitment, yes, we definitely see recruitment as an area for us to grow, but also making sure that we get the right people and the right talent that can service the business. I think these are the most important criteria for us. But certainly our focus is on the sales and marketing organization now for the next 12 months.
And for another aspect of your expansion going forward, I see from your cash flow statement that you spent about 7 million SEK on investments in, I think, intangible assets in the past quarter. First of all, could you expand upon what this is, and do you expect to spend more money on development or other investments going forward?
Yeah, the intangible assets relate largely to the acquisition of Pharmacept. So we have customer relations, some trademark, both for Pharmacept as well as for the product Embocept and Platicept. They're fairly well established. Yes, we're always looking to increase our intangible asset line. We just had a recent patent application done to support our bone project. So we will add to that considerably through our development work. If the right acquisition target comes up, as a company, we're not scared of an acquisition. I think this is in the history through Pharmacept, Adroit Science, and Chemoswed. So that's always a possibility if something comes up. In terms of investing in development, yes, we see the large value in the company moving forward, being able to get the DSM product out and put it into Pharmacept, so that we can really maximize the return on those products. And in order to accelerate that, we need to take investment into that area of the business on the development side. So moving forward, it is definitely our intention and strategically our intention to grow our development side into the development pipeline. And that may cause a slight imbalance between the development pipeline and the CDMO revenues as well at some point.
But I noticed that in the past you have taken most of the development costs and just expensed them as you go. Is this a change of direction going forward, that you're going to probably capitalize more the development costs?
As a company, we don't believe in capitalization unless we have to. Under the accounting rules and the IFRS rules, there comes a point where you're required to capitalize. And some of our projects are reaching that point either late this year or early next year. And this, of course, is a constant discussion that we have with the auditors as to how and when we should capitalize. But yes, I think we will have some capitalization of development costs in the near future. And this is just largely due to the fact that those projects are meeting the sort of legal requirement to be capitalized. But going forward, we don't have any plans to change our model. We will treat development as an expense for as long as we can, so as to not end up overcapitalizing in the business and to de-risk our overall balance sheet and assets.
Okay, great. I just remind everybody in the audience once again that you can write your questions. I have just one final question on my own, but you still have time to type a question if you have one. But my final question to you guys is, if you refer back to the goal you set at the time of the IPO, that you would have 5 products from your own tech platform on the market by the end of 2022. How do you see the progression so far? I suppose 3 of those can be easily named. It would be the Reimbursement S, the Smart Pan and Smart Gel, all of which are either on the market or very nearly on the market. Which are the next 2, and do you expect to fulfill down on that goal?
Yeah, we are still quietly confident about reaching that goal. So at this point, we don't see any rationale to move it. The 2 products that are closest to that would be our Reimbursements M for prostate embolization and the Reimbursements L for uterine fibroid embolization. So those would be the 2 that we would prioritize, at least in the early part of 22, to try and push through and get out.
And what counts as being on the market? Is a registration? Is that the sort of the hurdle that you have to pass, or is it the first sales? Would you see?
For us, it's the first post-approval use. So, for example, moving Smart Pan into the post-market clinical follow-up study, for us, that would be having the product into the market. So that would be the watermark for us to reach.
Okay, good. Well, I don't have any more questions, and I haven't seen any more from the audience either. So I just would like to thank you very much, Justin and Petra, and to thank everybody in the audience for listening.
Super. Thanks, Alf. Have a good week.
You too. Bye-bye.